Good morning from Chicago, traders. Thanks for joining me. Trading futures, options on futures, and foreign currency involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. I'm going to try to get through this as quickly as possible since the ECB president, Draghi, is still speaking and the market's still experiencing a fair amount of volatility. Don't want to keep anyone from trading, nor myself. Real quick, a rundown of the overnight news, as most of you probably already know. Pretty dead session overnight with about 2.5 points of range on the ES until the ECB announcement. Once the ECB announcement was made, we've had a 10-point range, 10.25 points, with the bulk of the move occurring upwards. The ES has pushed towards 1934.25 for the high. Recall that I've been talking about a 1938 probable target, which has multiple confluences based on a measured move. BOE keeps interest rates unchanged at 0.5. The APF, which for those of you who don't know what that is the Asset Purchase Facility. It's kind of like their version of the U.S. TARP. Remains unchanged at 375 billion pounds. ECB cut ref rates by 10 basis points to 0.15%, deposit rate by 10 basis points to negative 0.1%. Welcome to the world of negative interest rates, something that is probably going to become commonplace as we move forward. Marginal lending rate by 35 basis points to 0.4%. U.S. initial claims 312 versus 310,000. Claims a little bit worse, not a significant number. Continuing claims came in at 2.603 million versus 2.625 million, so slightly better on continuing claims. ECB's launching 2 targeted LTROs maturing in September and December of 2018 of $400 billion. Again, that's their TARP. So lots and lots of stimulus, not only negative rates and lower rates across the board, with marginal lending at 35 basis points lower, which is quite significant. But it's also introducing 400 billion in LTROs 4 years out. So this is how long the program is going to run for. This is how long the stimulation is going to continue to occur. In addition to that, Draghi just answered a question, as I tweeted out, has just answered a question by saying that the ECB is not done yet. So it's almost like they're threatening, they're threatening the market with further action, and this, of course, is depressing the price of the euro. The euro moved from a high of $1.36.5 to a low of $1.35.02. on the futures. Pretty sizable swing. Pretty sizable swing for a currency. That's what we have so far. The ECB conference is ongoing. If you check your Twitter feed, you'll see a link to the actual conference through financialjuice.com, or just go to financialjuice.com/stage 5, and you'll be able to click on a blue banner to watch the Q&A. There could be more action here as a result of how Draghi answers questions, so look out for that. Let's look at what's ahead. The only key thing we have today really that's ahead is the 9:30 EIA natural gas number at 116 billion. That's not really a market mover for indices, but for those who trade energy, this could have an effect. At 11 Central, U.S. household net worth for Q1 is announced. There's no expectation. The G7 summit has already begun, and at 12:30, Fed's Kosher Lakota, who's a voting dove, will be speaking on interest rates. 12:30 Central Time, and then of course at 10 o'clock for those of you trading treasuries. 10 o'clock, we will get the announcement on next week's 3-year, 10-year, and 30-year auctions. Let's have a look at the technical end of things. Let's pull up the charts. This is the overnight session or 24-hour session. This here is yesterday's day session. This is the overnight session. As you can see, pretty heavy volume. Given the last few sessions, have been down more than 30% on volume, 30 to 40%. The profile overall is not giving us very much information. Heavy overnight volume, no consensus on prices. You can see the prices are pretty boxy. The market's finally settling in on 1929 here. Strong up delta with the move on the ECB. This is a pretty hefty delta for an overnight session. So there's a lot of support for higher prices up here. I cannot assess the quality of the high. It does not look so great. I think the low looks more secure for now, but the overnight high does not look so great, and then the shape of the profile is not giving us any clues whatsoever on the opening moving forward, other than the fact that there is a wide range that's considered acceptance here, including yesterday's high, and we're battling in the middle of that range. VPOC, VWAP, and mid all at the same price, in the same price area. So it's anyone's guess as far as the opening goes. So that's the overnight action. Let's look at answering the question, what did we do, or where have we been yesterday? Open auction out of open auction in range opening type. I had pointed out in yesterday's Trader Bite that 19.1975 is the key LVN or low volume node kept left behind on Tuesday. This is the over-under number for the session. We need to keep an eye on the session. I also, if you recall and were watching, I also stated that the value area is not valid, that the true value is really from 1975 to the high, with a weak high left behind on Tuesday, and then there's a second distribution from 1975 to 1950. So two split profiles here, and that 1975 is key. So what the market did was it tested the 1750 early on an open auction, two-way auction. We could see it in price as well as in delta, crossing the zero line from above and below. Then it went and tested 1975 and fell off. My primary hypothesis yesterday was a test of 1975 to 2025, 2050. Expected sellers to kick in to push through 1650 and start walking towards 1375, which is this low here, with a continued push down to 12, and then 1909.50 the target for any downside movement. So that was Hypo 1. I saw the makings of weakness in the overnight session, and I expected that would happen. So we did get that early on, but Hypo 1 lasted a very, very short time. Immediately after the market PMI release at 8:45, the market went down to 1675, stopped one tick short of the prior day's low. It found buyers, and we had a large rotation up, and then as soon as we crossed 1975, I canceled hypo number 1 and went to hypothesis number 2. Hypothesis number 2, I'll show you my notes from yesterday. Hypothesis number 2, early chop ahead of the numbers, sellers to weaken and allow buyers to push through 1975 and 2050 to target 2150, 2175, and then weak high of 23 from yesterday. New high of year expected in that scenario. So what we had was hypothesis number 2 working out beautifully. So once we broke through 1975, we had the pullback to 1975, which is VWAP, the opening swing high and the mid, beautiful area right here, and then it started to walk up and through the 24 even high of year to push to 1927, and then it held that price at the end of the day. Again, volume is fairly light. It's about 35% lower than the norm for a day session at 744,000 versus 1.3 million. A couple of other artifacts left behind yesterday. It left a weak high behind, so 27 tested and retested. A very strong ledge in the volume profile here with the point of control within 4 ticks of the high of the day. This basically portends that the high will not stay overnight, will not likely stay overnight, stay intact overnight, and we expect that the market will continue higher in that scenario, and it did. It did. Sorry, I'm just trying to listen to what Draghi's saying as well as talking. We have a short covering profile, a P-shaped profile, just shorts being squeezed and fueling this move. You can see here, once we put in the high of 27, the market participants started to hit the bid and backing off very, very rapidly. It's very interesting how we just keep dropping to 0 or below. So in this 3-point rotation, we dissipated all of the volume that was lifted in the entire rotation from 1975 to 1927. So in a 7.25 point rotation, all of the volume was dissipated or neutralized in a 3-point rotation down, and the market just went sideways for the rest of the session. Okay. Key LVN was left behind again yesterday at 22.25 right here. So I'm watching that number, 22.25, marked on the chart here. Again, keeping that old key LVN up at 1975. Note that the initial test and retest of Tuesday's 1975, I want you to recognize that the market is basically confirmed this is a key area to watch for, so don't get rid of this 1975 area. The VPOC, the point of control here, the pink line, which is the most valuable price of the day or the most traded price of the day, is way outside of the prior range. Very bullish market, accepting higher prices, way out of range. Again, because of that, the value range is higher. With it comes a higher low and a higher high, confirming price action as well, firmly keeping bulls in charge, and I'm still targeting 1938 even above. Okay, this is classified as a normal variation day in my notes. It did not quite get to 2 times the IB. It does not have the characteristics of continuous price discovery, so it falls under the category of normal variation day. So what does that bring us to? This brings us to what we expect today. I have no idea which of these hypotheses is likely to play out best. There's a fundamental change that has occurred here in the market, in that the euro becomes more available. There's more of it flooding the market, of course, causing a drop in the euro, the value of the euro. I don't know how that's going to be treated by the financial and banking stocks in the S&P 500, which are a significant sector in there. However, from an auction perspective, my hypo has to fall under the typical auction behavior, in that we're gapping in new high territory. So I expect an open auction out of range, and then I expect responsive sellers, those who are long and looking to bank whatever it is that they have in profits, either partially or completely. We'll never know. I expect them to respond by selling towards 1926 and 1927. So I expect the initial move to be an open auction out of range. I expect there to be reasons, strong reasons for buyers to buy and decent reasons for sellers to sell. So I expect an open auction out of range, a two-way auction. I expect the market to start drifting lower, but the overall trend is for it to continue higher. And again, 1938's within range today. That figure has multiple confluences, multiple measured moves, all tagging at the same price. So I expect a small responsive selling participation this morning, and then buyers to step in and to continue higher. I'll remind you that the market's been waiting for a month now for this ECB announcement, and it got what it wanted. In addition to that, we have non-farm payrolls tomorrow. So the action today is expected to be is expected to take place early on, and it is expected to go into just really tight chop like we've had for the rest of the most recent trading sessions into the close of the session, until the close, where positions are expected to square up before a major number tomorrow at 7:30 Central, which is the unemployment numbers in the U.S. Okay, so that's my primary hypo. I expect responsive selling to find buyers, and then for it to continue higher in up and through 1934.25. We're opening out of range in brand new territory. There's an elevated risk of an open drive in either direction. Given the news, there's just no way for me to know. So my best strategy right now is to just sit on my hands, monitor the underlying sectors of the S&P 500, and see what kind of reaction we're expecting to get. Early indications for the XLF is at 2249, gapping up. So we'll see how that goes, but there is an elevated risk of an open drive or an open test drive today, so be careful. I strongly suggest, if you're trading a smaller account, I strongly suggest you sit on your hands for the first 15 minutes at least. Let the market work out. Let the big players get in there and punch each other out, and then find out who is stronger and step in with the stronger participants in there. As always, trading derivatives is not suitable for all investors. So there's a tremendous amount of leverage here. So be wise, be patient. You have a strong 2 hours to do something with today, and then of course you have the rest of the session to nitpick and practice being very, very patient. But overall, the market is in a firm uptrend with prices one-time framing up for quite some time. We still have the 1903.50 to 899 quarter below us, but for now there's no sense in talking about that. There's a lot of weak structure behind us or below us. For now, the market does not have a reason, with stimulus coming in from Europe, the market does not have a reason to turn around and just implode. Maybe it does, who knows. The market will do whatever it wants, whenever it wants. It's just a function of the stronger participants pushing prices one way or the other. But in any case, I strongly recommend that you just sit out the first 15 minutes and let the noise subside before you pick a side and then decide to commit your money, your hard-earned cash, into the markets. Okay? So I'll leave you with that. The headline risk, potential headline risk, is continued releases or continued information coming in from the ECB or other major players, maybe a response by the Fed. So I'll be tuning in and carefully to the news all day long just to see if anything comes along to bolster that position. Those of you using IRT, Investor RT, maybe even Market Delta charts, note that there's in the new version of IRT, there's a little box on top of the profile. This is something I've been working with Chad on. This is a box that you can open and close for every profile, and it gives you a lot of statistics on the current profile. Some really excellent information in here. I want to introduce that feature to you. Have a look at that. Play around with it. I'll leave you with that. Stage 5 traders pop quiz is coming out today, and last Friday's video was published yesterday, now that we've recovered from the failed hard drive in the office. I'll catch you on Twitter, and I'll catch you tomorrow. Take care.